So let's watch that one anyway. So this is gold on the 4-hour time frame, right? So what is the trend here?
Downtrend.
Downtrend, right? So we're looking for setting opportunities, right?
Yes.
So then you zoom out, you zoom in. What do we have here? We have a rally base drop. Agreed?
Drop. Yes.
We have a rally base drop there. So if you drop even further to the 2-hour time frame, you have equal highs. You can see that this level here was respected by price. You see, the market reacted from this level twice, and then the market kind of consolidated a little bit there. And then we are seeing something interesting here. We are seeing the market actually coming to us in the form of a compression. This is a compression right there. And usually what comes after a compression?
Drop.
What comes after a compression?
Expansion.
Expansion, right? So the expansion can either be to the upside or to the downside. So we just wait for the price to break out of this expansion, out of this consolidation right here, either to come to this level here. If it comes to our level right there, then we'll be looking for sales. So you can clearly see that we have a rally-based drop supply zone with equal highs being created, and then we have the market coming to us with what we call, this is also called a rising wage. So what we're anticipating here is that we could wait for price to come to our level here, and then if we have a confirmation, we can get involved. Right. So this is what I'm going to wait for. So if you go to the lower time frame, you're going to realize that we had, let's go to the 3-minute time frame. So you always have to start from the higher time frame and then you go down to the lower time frame for you to actually be able to find an order block. Can you see the order block here? Can you see that it's very clear here? The last bullish candle before the bearish candle right here. So that is your order block. So you get the high and the low of that candle, and then you get this triangle too, and then extend it to the right side. That is your order block. So what you have to wait for is you wait for the price to come to that area right there. And then on top of that, the other complexes that we have these big momentum candles right here. We have these big candles right here, which gives us confidence and confidence that the market might pull back into that area for potential sales. And this trade alone is a 1 to 32 risk to reward ratio, 8 pips stop loss, and 250 pips target. So if this trade alone just works out, you'll be done for the week, even for a month. Because I mean, 32%, if you're risking 1%, that's big, right?
Yeah, that's big.
Yeah. So this is how it is. So we have a rally base drop supply zone with equal highs. Then we have the market coming to us in terms of the compression. So what we're waiting for here is waiting for price to push into this level, then for potential sales. That is like that. And remember that we are trading in the direction of the trend, which is the path of least resistance. So, do you have any questions on this particular trade? Does anyone have any questions here?
No.
Nope.
Me, I have a question. I have a question. Anyway, look at this. So if you go to the higher time frame, there's also a good chance that the market can actually blow past this level here. Look at this candle here. So you can actually connect these two here. You can connect this and this here. Have you noticed that?
Oh yeah.
So meaning this can be liquidity, and the market can actually push to this area here. It's very possible that the market can break that, and that can act as liquidity, and then the market can come up to that level right there. It's possible, right? So that's the reason why we have to always use a stop loss. We always have to use a stop loss because literally anything can happen. So right now, you have to keep that in mind, that this can act as what? As liquidity as well. Yeah, but you can clearly see that if you go to the lower time frame, you're going to realize that there was also a rally based drop supply zone, and then the market respected this level, and this was the sell. So if you go to let's go to the 15-minute time frame. You see, so if you can go lower, I can promise you that we can have we'll have something like this here. So let's go to the 3 minutes time frame. Okay, 3 minutes. Okay, nothing. How about 1 minute? Just trying to prove a point here. Yeah, so you see what is happening here. So you'd have gotten the last candle, right? That candle right there, like that.
Yeah.
And then you go back to the 15 minutes time frame. You're going to realize that this was a setup on its own, and it worked out very nice. So in this case, it kind of went beyond the stop, beyond the higher high for a little bit. So you'd have taken this trade, and this would have been a very good trade, 1 to 19 risk reward ratio. You see? So this is the same thing that is happening now here. Just like the trade we were looking at yesterday. So the question is that, are we going to see price come to this level and also then drop? That's the question, right? So we just, for now, we just wait. We just play the waiting game. We just wait and see what the market is going to do. There's nothing else that,
Or
yeah.
or do you reckon price could go up, take out that equal high you've just shown, and then drop?
Yeah, it's possible. It's possible that the market can do that. So we just have to be on higher alert and just watch the market. Let's watch the market and let's see what's going to happen. It's possible that it can just take out these equal highs and then as buy side liquidity, and then the market can drop. It's possible. So we have to go on higher alert and we wait and see the market, see what the market is going to do. We have to let the market show us the hand first before we can get involved. So we will have to do that. Otherwise, it looks very good. It's a very good setup right here. Looks very promising, but it's always probability. So it is what it is, right? So I hope you don't have any more questions here. It's very clear,
No.
right?
Yes.
Okay, good. Let's go to the next. The next is GBP JPY. So GBP JPY. Also, we've seen a little bit of a trend to the downside for some time. Seen this trend to the downside for some time. And then now we've seen this rally base drop. We have a rally base drop. Okay? So you drop even further. Let's go to the 30 minutes time frame. So something caused me to actually look at this. So if you pay attention here, is there anything that stands out for you guys? Is anything standing out for you when you look at this particular pair right now? Anything special here?
This is under 30 minutes. Let me just have a look at mine.
Yeah, oh yeah, 30 minutes. You can even drop even after even the 50 minutes time frame, it's there. What is special about this pair? About this setup right here?
So that there's on so on the 1 hour, for me, what I saw on this is on the 1 hour time frame, there was a change of structure, and now the price is heading back to that order block that caused the change on the
Okay.
1 hour. That's what I saw, basically.
Come again?
So on when I was analyzing this chart on the 1 hour time frame,
Yeah.
I saw that price had a change of structure,
Okay.
and then it's now coming back to that order block to sell, probably sell from there.
Okay. Like you're not seeing this beautiful candle that we have here. This candle here. Look at this candle. This candle is the one that is supposed to stand out for you. Look at this
Now
candle.
that's massive as well, yeah.
Yeah. So there's a reason why I didn't choose this one here and I went to this one. It's because of this big candle right here that actually caused the break of structure for this particular trade right here. So Yeah. So what I did was I had to go to the lower time frame for me to clearly find my order block. So you can clearly see that that's my order block here. Whenever you see this big candle here, it tells you that, mind you, the people who are responsible for this big momentum candles, it's not us, it's not video traders, it's the smart money guys, right? The banks, right? So whenever you have this, it just tells you that there's still more unfulfilled orders above here. So price has to what? To pull back into that area so that it can take the unfulfilled orders which were left behind. So whenever you see a big candle like that, you get excited because you know that price is most likely going to actually come back to that level. So that's the reason why I have to go with this one and not this one. But again, it's possible that the market can actually take out this high and come to this level, then you can see a drop. So it's all about understanding the structure and knowing that if this happens, then we'll do this. If this is taken out, then we'll wait for the price to come to that level. It's that simple. So basically we have a rally base drop, and then we have equal highs here. We can see that we had this high, and this was tested a long time, I mean for some time. And then we can see that the market actually took out this high here. The market came to that level right there. And just like the previous one, what we're anticipating is that we're waiting for the price to pull back into this area and then drop. And mind you, the market can still pull back and take out this level right here and come to this level right here, and then we can see the market continue to go to the downside. So anything is possible. We just need to be alert and be watchful. Otherwise, it's the same setup.
So quick question. If you go on the 4 hours,
Sorry,
if you go on the 4 hour time frame,
4 hour time
on
frame.
this, yeah.
Okay.
So, and just zoom out a little bit. No, zoom out.
Oh, is the out?
So I'm just having a look. So you see on the left hand side there,
Yeah.
there was a massive drop,
Yeah.
and then a bit of a pullback and a drop again.
Yeah.
So price is basically initially come right now to mitigate that supply,
Yeah.
and now it's pretty much doing the same on a lower time frame. So it's done that on the higher time frame,
Yeah.
and it seems to be just wanting to do the same thing again on the lower time frame to sell.
Yeah. Yeah, but again, like remember what I told you guys, like on the JPY pairs, all the JPY pairs are having this big candle right here. So this is the one that is going to attract price to that level there. You're going to see the market pulling back to that level. I mean, pushing towards this level right here because there's a lot of imbalance or inefficiency here. So price has to balance. It has to come here so that it gets balanced. So eventually the price has to come here, but we don't know when that's going to be. Yeah, but for now,
Cool.
yeah, this is what we're watching for. But yeah, we'll just wait and see what's going to happen here. So I advise that you can do the plotting on your charts as well so that you can have them. It's very important. So the next one is Swiss JPY. So Swiss JPY, it's a similar scenario. So if you go to the yeah, look at this candle here. Oh, this is the one we were looking at yesterday, right? This is the one we were looking at yesterday, Swiss JPY, right?
Yeah.
Yeah, this was the one we were looking at yesterday, Swiss JPY. Yeah, this big momentum candles right here. So we just for this particular so we have a rally, base drop, change of character, and then we see the market coming to our level right here. So what we're waiting for is just for this pullback. We wait for the market to try and pull back into our area so that we can get involved. If it doesn't pull back, then we don't chase the market. We don't chase the market. We let the market come to us, right?
Right.
Yeah. So here, when the market is going to open tonight, I mean, yeah, today, yeah, in few hours, the market can literally just from here can just move to the downside and we can be left out. So there's no need for us to chase price. We let the price come to us. So this is a solid setup here. We have uh rally based drop with big momentum candles. Whenever I see these big momentum candles, they give me confidence because I know that there's a higher chance of price pulling back to this level here. So it's very important for you to look for such candles. Very, very important. Yeah. So, and also you have to realize that not all setups are always going to present with liquidity. Like you can see here, there's no. Can you spot any form of liquidity here?
Sorry.
Can you spot any form of liquidity on this chart right here? Now on this setup.
Um, I mean, there's a trend line liquidity on right below.
Yeah. Yeah. Maybe trying to liquidity, but like in terms of like here, like nearer to the supply zone.
No,
No.
unless maybe go to the lower
Yeah.
time frame.
Even yeah, because there's nothing really.
There's nothing
Yeah,
there.
what you have is just maybe just a compression. This is a compression that we have here. We have the market just compressing as it's coming towards this level right here. So you can clearly see that that's a rising wage, and the rising wage is always accompanied by, I mean, it's always followed up by a big break. You can see this is what we call a bearish. Nah. You see, this is a compression, and the market push down to the downside. So what we're waiting for right now is for the price to try and push back into our zone, and then we can look for selling opportunities. So remember yesterday we had to go to the lower time frame in order for us to find our order block. So it's always important that you do your multiple time frame analysis, find your order blocks on the lower time frame. It's going to help you a lot because especially in terms of stop loss is going to be smaller. And like if you take an order block on the 1 hour time frame, it's going to be bigger. Your stop loss is going to be bigger, and if your stop loss is bigger, you can't use a bigger lot size, right? Because we always predefine our risk, and we use the position size calculator. I hope you all use a position size calculator for calculating your risk.
Yeah.
Yes.
How do you do it? Which one do you
I,
use?
I have an application actually.
Okay. How about Mr. Ngoma?
Yes, I've an ear where I just punch in my
Okay,
percentage
nice.
risk.
Yeah.
Yeah.
So for me, what I use is this. I use the one by my FX book. So you come here. It's simple. For example, if you're looking at Swiss JPY, I'll put Swiss JPY here. Swiss JPY. Then my currency is there. Then the account size. Let's say I have $1,000 account, right? And I want to risk 0.5%, and then my stop loss in this case is what? 3 pips. So I'll just put 3 pips here and then hit calculate. It will tell me how much I'm risking, and the lot size I'm supposed to what? To use
Oh,
right
okay.
here. So I'll just get this one 0.22, and that's going to be my lot size, and my risk is going to be $5. So it changes like that. If I increase my stop loss, my lot size also reduces. You see, but the
Yeah.
risk is still the same. So you always have to predefine. This is what you're supposed to be doing every time you're actually taking a trade. Go put the calculation in and make sure you know how much you are risking. Understand this is the amount of money I'm risking, and I'm okay losing this amount. It's going to be okay. It's going to be better for your psychology because you would have known how much you are putting on the plate. You know exactly. Okay, this is the amount of money I'm willing to risk, and I'm okay with it. The moment you're not okay with the risk, you're going to spend most of your time trying to see how the trade is going. You're in the meeting, you're at work, you want to see how the trade is running. No, let me see how the because you've not accepted the risk. But the moment you're going to accept the risk and you say, okay, I'm okay with this risk, even if I lost this trade, I'm okay. You realize that you are going to stop panicking, and it's very, very important. This morning I was just reading a book by just a summary of a book by Tom. What's his name? Tom something. And then the title is called Trader Tom. Yeah, Trader Tom. The title is called the best loser wins. The best loser wins, and I loved it. I think I shared it in the group as well some time back. It's a very very good book. You have to read it. You have to read it. Like the first one, the first thing we talked about was the difference between the 95% that lose money and the 5% that makes money consistently. What do? They do exactly the opposite, right? You're going to realize that the best win, the people that end up making money, whenever they take the trade, they tell themselves they don't think about the profits. The first thing they think about is the risk. Because the moment you start to think about the profits, you are doomed, because money itself is what? Is an emotional subject. So the first thing you're supposed to do is focus on the risk and not what? And not the reward. If you focus on the reward, you're going to have unrealistic expectation. So this is the one. The first command is assume you are wrong. And which 90% of people focus on the positives, but if you focus on the negatives, on the risk, assuming that you are wrong on that particular trade, it will be easier for your psychology, and also prepare to become uncomfortable. So these things are very very important, right? So this is how it is. You always have to calculate your risk every time. It's going to keep you in the long term. So do you have any questions here? We did this yesterday. Does anyone have
Nope.
no questions?
No, no questions.
Okay, let's go to GBP NZD. So always we start from the higher time frame. So we go to the higher time frame. So GBP NZD has been going to the downside for a long time. Okay, so overall direction downtrend, right? Then you come here. What do you see? We see big candles here. We see a rally base drop. Rally base drop. What do? We go to the lower time frame. Let's go to the 30 minutes time frame. Amazing. What do we see? We see big momentum candles.
Yeah.
Big momentum candles. So you see, if I wanted, I was going to do this and just take this. Now look at the difference, right? So what's the difference with this one and the other one? So this one is 24 pips, right? And how about the one I made? This is 7 pips. You see the difference?
Mm-hmm.
Yeah.
So it's very important for you to scale back, go in and refine your entry so that you wait on that last order block. That is the most important aspect for you to actually be able to reduce your risk. And by reducing the risk in terms of stop loss, you are ultimately increasing your what? Your lot sizes. And I mean, who doesn't want to use a bigger lot size while risking the same amount of money? Who doesn't like doing that? All want to make money, right? So the only way we can do that is by making sure that our risk is our order blocks are refined. Now look at this. Here you can clearly see that now we have a much smaller order block here. If you can even go even further, you're going to realize that maybe there's even a smaller order block on the lower time frame. Like that, you are giving yourself chance to actually get the best kind of an entry signal right there. Because the market most of the time will definitely come to that order block right there, because that's where the orders are. So you hear me talk about the footprints. These are the footprints that the market leaves behind. Yeah. So you can see now that this alone is how many pips? This is about 6 pips instead of having a 24 pips. You see how much of a big difference it makes.
Yeah.
Yeah.
It's a very big difference. So instead of you being lazy and not trying to go to the lower time frame, like no, I'm just going to just take the order block on the 30 minutes time frame, you end up using a smaller lot size or risking the same amount. I'll go to a lower time frame and risk the same amount and make more money by increasing my lot size, but while risking the same amount. That's how you do it. Yeah, so we have our order block right here. So this is a rally based drop. We get the last candle right there. Now let's go back to the 30-minute time frame. So we have our order block right there. So that's a rally based drop. Okay, and then we have a rising wedge, which is are we all familiar with a rising wedge?
Yeah.
Yes.
Okay, so let's start. So a rising wedge pattern. Yeah. So this is how it looks. You see? The market is going up, 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 and up, and the market drops. It's used as a confirmation entry as well. So it's the same thing here. You can see? Want the market to push, 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 and then it drops. So right now we are hoping that this one is going to continue up to where? Up to our entry right there before we can see the what? The drop.
The drop.
Yeah. So this is our setup right here. Very, very simple. Rally based drop supply zone. Then we have a compression, which we call CP. CP is a compression pattern. So this is some of the ways that the market can come to us by a compression right there. So it can be a compression, it can be fake out, it can be a diamond. But diamond setups are very, very rare. You're not going to find them. No wonder we stuck with only the fake out, because fake out setups are everywhere. They are very common. If you focus on the diamond setups, they are very rare. So no wonder you see a lot of fake out setups. And have you realized that we have a lot of sell setups done by setups?
Yes. Yeah.
Yeah.
Yeah, a lot of sales setup, and that's just the nature of the strategy that we use. Most of my setups, I can say 90% of my setups are always sales setups. Yeah, but it works either ways. Buy setups and all that. I think I have one on Nasdaq today. We'll just go through it right now. So do you have any questions here? Any questions here?
No, not at the moment.
Everything is clear.
Yeah.
Yeah.
Okay. How about my brother, Mr. Singh? He's not unmuted his mic. Okay, Mr. Singh, we're not getting you. We're not saying anything. You can, if you don't want to talk, you can just type in the comment section. Please, we want to hear your voice as well. Yeah, so want to hear your voice. Please, you can also ask your questions in the comment section so that we can actually just hear you, or just ask any questions if you have any. Yeah, so the next one is yeah, this one looks very, very, very good. It looks very, very good. But like, remember, like what I always say, even the most perfect setup is going to fail. Even the most perfect setup will fail. So we always have to be mindful. No wonder we always have to predefine our risks. So for some time, Nasdaq has been going down. We've seen Nasdaq going down, but something significant happened here. Do you see that the market now broke this trend line here?
Yeah.
Okay.
Yes.
Yeah, there's a break of that trend line right there, which can mean that the market has changed direction. So what's going to happen here? So on the 4-hour time frame, we can clearly see that we have a drop base rally. Drop base rally with break of the previous high right there, which confirms what? Change of character. And then on top of that, if you now drop to the 1-hour time frame, you're going to see something significant here. We have liquidity. We have equal highs which were left behind. We have equal highs, and somehow the market actually took out this low. I mean, equal lows here. You have a low which was taken out, and the market pushed to the upside like that. Now the question is, will the market pull back into this area so that you can see the market going to the upside? We just have to wait. So how did I come up with my entry? I came to the lower time frame here. I think I went to the 5 minutes, is it? For me to find my order block. I like refining my entries. I like those sniper entries. Yeah, so we have a drop based rally. Find the last candle right there, and then you just put that rectangle onto the right side. That, yeah, and then just wait for the price. Now we're just waiting for the price to pull back here. So we just wait for price. You see how the market is going to open. Our hope is that the market can pull back into that level right there, so that we can get
So
involved. Yeah.
so you see the wicks on the left hand and right hand side. Is that not more liquidity that it's just made as well? So possibly going to want to come down.
Which one?
So you see below the liquidity zone, you have marks. Yeah, that there
Yeah, yeah,
exactly.
yeah,
Yeah.
yeah. So yeah, this is also liquidity line. This is liquidity. I think, yeah, this is actually more liquidity here. So you can see this is actually more accurate than this one actually here. Yeah, this one is exactly the same. So no wonder I'm saying we'd have to wait for price to pull back into this area here, so that this liquidity can be taken out. And
Mhm.
yeah, so what you can do here is, as always, just set an alert inside your zone, at least in the middle of the zone, and then just wait. It's just a waiting game. And once the market is triggered, you're going to actually execute your setup, execute your trade. So right now we're just waiting for a pullback. If the market pulls back into this zone here and gives us our entry confirmation, then we'll get involved.
Yeah, this will be a nice trade.
Yeah.
Very nice.
And guess what? This is a 1 to 30 risk reward ratio.
Oh,
All you need is just one trade. Just one trade, you'll be good. Just one. So this one is a 12 pips stop loss and 500 pips target. Actually, 535. This is the whole setup we analyzed it last week. Like this whole move, we called this whole move. So let's see if we can catch the rally one. Let's see if we can actually catch this rally. It'll be nice. It'll be nice. Yeah. Otherwise, this is pretty much clear. I don't know if you have any questions here.
No, that's pretty
no.
clear as well.
It's clear, right?
Yes.
Yeah.
Okay. We go to the next Euro card. So we have Euro card here. So the euros, they are kind of in a more like in an uptrend. No wonder I was very hesitant even looking at this. But hey, anything can happen. That's a principle right there. Anything can happen. So this one right somehow it is actually more like there's been the major predominant trend was down, but now we've seen the market pushing to the upside. Just like the previous one, we've seen the break of what? Of the trend line right there. So we saw something interesting there. If you go to the 4-hour time frame, we can clearly see that we saw this big candle that broke structure. This big, and you can see that this was just a massive candles pushing to the downside. One, two,
Mhm.
three, 4-hour candles, and that was how many pips? Those are almost like what? 200 pips. That was massive.
Yeah.
Yeah, so when I saw that, I came here. Remember what I always what I always talk about. Remember the consolidation, expansion, retracement, and then reversal. Just like the Swiss JPY setup we're looking at. This is exactly the same. Again, instead of us getting all this, we went to the downside and to the lower time frame and found some our order block. You guys are going to forgive me. Sometimes I stammer, so you forgive me.
Oh, it's fine.
That's not a problem.
Yeah, but are you guys able to get me that clearly?
Yeah,
Yes.
yeah.
Okay, great. No, you can be talking alone while people are not being actually getting anything. Yeah. So the last bearish candle right there, that last bullish candle right there, you get that candle, and then that's your bearish order block, and then we just wait now for the market to push towards this level right there. So we're just going to wait for the market to come to our level, And if the market doesn't come to our level, we move on to the other setups. I mean, we have a lot of setups to actually trade. So one trade should not cause us not to actually take other trades. And also remember, we have this high here. So if this high is taken out, remember just like the previous one, I've chosen this high because of what? Of this imbalance right here. But the
Mhm.
ultimate high is there on top. So if this high is taken out and the market comes to this level, you have to take the trade.
Yeah.
So it's like that. So I'm looking at and sometimes what I've realized is that whenever you have two zones, most of the time the market will take out the first zone and actually come to the second zone and actually respond from there. But there's no way to know which zone is going to work. So if the market comes here and gives you an entry signal, you enter. It takes you out, you wait for the market to come to the second one. If it gives you an entry signal, you execute that trade. It's as simple as that.
Hmm.
Yeah, this is also 11 pips stop loss and 190, almost like this is 200 pips target, 1 to 18 risk reward ratio. This is very big. So, very good setup right here. We just wait for the market to actually give us the confirmation. I think this is also clear, unless you have any questions. You guys
I
don't.
guess there's no liquidity
Yeah,
around the area.
yeah.
Yeah.
Same with this one. There's nothing. Don't really, maybe we go to the lower time frame. Uh, there is. You see this high, this
Mm, mm, mm.
yeah, on the lower time frame there is. So there's this here. Yeah. They say if you can't identify the liquidity, then you are the liquidity. Yeah. So here we have liquidity here. We have this high here and this high right there. So wait for the market to take this out, and then the market can come to our level, and then we execute. Basic stuff. Basic stuff. Same scenario. That's a good thing about our setup. It's just one setup. One setup.
Mm.
Yeah.
Yeah. So on this one, Swiss card Swiss here. I think we are trying to catch a falling spear here because the overall trend is down. It's like we're trying to pick tops and bottoms, which is never a good idea. See, the meta trend is down, right?
Yeah.
Yeah.
But then something intrigued me here. These momentum candles that left structure here, these big momentum candles here. So these are some of the setup where I just analyze. I just want to see how is the market going to respond. And if the market comes to my level and actually starts to respond, I might just jump in. But I know it's not the most perfect setup that I would actually take.
Yeah. But you see on the left hand side, didn't those four of candles break structure actually on this 4 hour?
Sorry.
Has it not changed character on the 4 hour for a buy? So it's coming back to test the zones.
Yeah, it's possible. It's possible because you've seen the market after creating higher highs. So higher high. Yeah, so it's possible that the market it's possible to catch the low of the particular setup. It's possible, but it's you really have to like you have to deal with a lot of losses sometimes. Yeah, but
Mm.
this is a good one. This is a drop based rally, and the good part about it is that we had a lot of what big candles, which is
Yeah.
significant. Yeah. So
Plus that rally also broke the structure
yeah,
on the left hand side.
yeah. So this structure was broken. Very significant. This is significant. So we just wait. So we can see here. This is what we call a 3D drive. So this is a 2D drive actually. This is a 2D drive. So yeah. So literally, we're just waiting for that. See how the market is going to respect this level. If the market comes to this level right here, and then we can look for sales. We can look for sales right there. If the market gives us the confirmation, then we would actually sell. Imagine having four of these setups work. How much? How much percentage would you be
Oh,
out?
that's the month's done.
I remember that there was a week last year we did almost like 62% in 1 week.
Wow. Okay.
62%. It was mad. Like we had a lot of setups actually responding nicely and actually going to profit. So this is also very clear, right? No questions
Mm-hmm.
here.
No, no questions.
All right, great. So let's look at NZD. I think we just remaining with about four more pairs, then we'll be done. So uh NZD, AUD NZD has been trending to the downside for the longest time. Okay, so we've seen this downtrend, and then we see this market coming to this more like a retracement or a correction. And now we go to the 4 hour time frame. We have so can someone explain what is happening here?
So it's a rally base drop with a change of structure and then a compression to the top
Okay,
for an expansion,
and then
possible expansion,
what do we have? What do we have there?
and a liquidity.
Yeah,
Ah,
we have
yes. Yeah.
liquidity right there, and it looks. I mean, we have a lot of beautiful setups this week. Really, really solid setups. Yeah. And this one is a 1 to 20 29 risk reward ratio, 4 pips stop loss, and 100 pips target. So rally based drop, we go to the lower time frame, find our order block. Let's go to the 5 minutes. Uh, yeah, very nice order block. You can see here the last candle right here.
Yeah.
That's a nice order block right there. So yeah, we'll get our order block, and then we have nice liquidity right here. The market nicely respect this level right there. And also this would have been a good setup as well. This would have been a good setup as well here. You see? And the market seemed to have just reacted from that level. Now, because of this here, if this is taken out, then the market is most likely going to come to this level where we have the outmate high. So whenever you have liquidity, just whenever you have whenever you have two major zones. So in this case, we have this one and this one, right? So like I said, most of the time the market will take out this one, the first one, to go to the second one. Yeah. So what we're waiting for right here is for the market to push back here so that we can sell. So I hope that happens. I'm sure maybe we might have 2, 3, 4 setups from here actually coming to our level. So whatever happens, we always predefine our risk. We make sure that we internalize the risk. We understand that if we are okay, we are really okay losing that amount of money, and then we execute. Yeah. So this is a setup. It looks good. I might say it looks very good. We just wait for the market to come to our level, and if the market comes to our level, we wait for our entry signals, and then we execute. Basically, it's the same stuff. Euro USD. So the US dollar has been dominating for some time. So on the 4 hour time frame here, again, you are seeing the same thing right here. We see this rally based drop here. So it's much more clearer on the lower time frame. So here, sometimes you see it's very difficult to tell that there's actually anything happening. Sometimes what you're going to see is just a big wick, like in this case, you have just one wick right there. But if you go to the lower time frame, that is what a rally based drop. Always remember, the market is fractal. Price action is fractal. So we have a rally base drop, and then in this case we actually have a perfect Quasimodo strategy. I mean Quasimodo setup. We have a QML here. We got the low, higher high, and change of character. We have liquidity which is being left behind. Okay, so right now we just wait for the price to pull back into our area, and then we sell. This is a basic Quasimodo strategy, basic Quasimodo level. The first area here is what we call the past. The past, you have to have a QML, a low, higher high, and what? And a break of structure. So this is what we have here. So you have a high here, this high here, you have a low, you have the higher high and break of structure. That's in the past. Okay, then the next one is the approach. How is the market coming to you? So now the market is coming to us in terms of what? In form of a of a fake out. Okay, so this is the fake out. So this is the process. Now the approach. Now we have to wait for the approach. How is the market going to come to us? What confirmation are we going to look for before after entering this particular trade? So we just wait for the market to come to our level right here. And once that happens, then we will be willing to jump in this particular trade. And also it's a 29 risk reward ratio, 4 pips stop loss. Very, very basic setup. That's like very similar to most of the setups we've looked at. Yeah. So I expect everyone to be like right now to be very proficient in terms of analysis. I want to be seeing most of your analysis. Like it gives me confidence that people are actually understanding this stuff. So let's be sharing our setups. Let's share our setups. So like I told you guys, from here you can just send your analysis of Swiss JPY in the chat so that we see how you analyze your pairs. Don't be shy. Don't be shy. Don't fear criticism. It's okay to be criticized.
Yeah.
Fine. So that's how you're going to learn.
Okay.
Yeah. So we go to the next. Yeah. Also on I think Emeka, I've seen that you've now improved because your trend line for the liquidity used to in the first I was seeing a very long thing. I don't know if you corrected it now.
Yes, I have. Yeah.
You have corrected it.
Yeah.
That's good. That's good. Yeah. So make sure your it's touching those levels. It shouldn't extend to the other side. So that the chart looks very neat. Otherwise, the charts are good. They look really neat.
Okay.
Yeah. And then the next trade is GU, the cable. Yeah. So same scenario with EU. We have that's a rather best drop in the overall direction, which is to the downside. So we have a rather best drop supply zone right there. So if you drop to the 1 hour, let's see if we have something. We have equal highs. Yeah, we have very clean equal highs. You've got this high and this high. Okay, and on top of that, we have rather best drop. So we just wait for the market to pull back into that area and then drop. Really, really basic stuff. Really, really very basic. So rally based drop, the market comes to this level right here. Yeah. And then look at this. Look at how enticing this big momentum candle is. So if this was during the week, I'd be interested to sell from here. But this being a weekend, being a Monday, tomorrow being a Monday, this is most likely going to be taken out because of the Asian range. Otherwise, this is a very, very nice candle right here. So we just wait for. I'm positive that this is going to be taken out. Price will take out this high, then most likely come to that level right there. Or we might see the market just from here, just plummeting to the downside. It's possible because of this big candle here. Yeah. So the market can just come here and go down, or it can push up, take out the liquidity, and then drop. So all that is possible. So I mean, DU, AU, EU, they are literally just the same, right? You see that this is exactly the same.
Yeah.
Right?
Yeah.
Yeah. So it's basically that. So what I would encourage you to do is the setups have already been shared. So you try by all means and start marking up your chart. See how you do. See if you're going to have challenges in terms of finding these setups. And then, yeah, if you have got any questions, you're free to actually just let me know or ask in the group so that other people can respond. It's very important. So that you gain the confidence in the setups as well. So that when you do it on your own, it's very, and like that, you won't even have to wait for me to send the signal. When you see the market coming to your level, giving you confirmation, just execute. You can actually give me just the way Emeka does it. You alert the group like, oh, this pair is actually approaching our area, or it's in our area. Like that, maybe someone was busy. You go back to the chat and actually look, oh, this is what is happening. Okay, let's now get ready to what? To execute. Like that,
Yeah.
that it's going to be better for the community. So not just for you, but for the community as well.
Mhm.
Yeah.
Yeah. Yeah. So I don't know. Yeah, we've exhausted all these setups here. I don't know if you have any questions.
I think they're pretty clean setups. I think.
Yeah. I wanted to wait until I was done with the videos before I started posting.
Oh yeah. No, that's good. That's
Yeah.
good. That's good. Yeah.
But I love the way you guys are saying these things, so I'm trying to follow.
No, you get it. You get it. You get it very
Yeah.
soon. Otherwise, the setup is very simple. The strategy is very, very simple. You know, the thing is that the Quasimodo strategy, um, there's a lot of setups. If you have you tried to look like on YouTube, there's just to find like videos of people explaining about the Quasimodo.
I did last night. I just haven't watched the videos I downloaded.
Okay, like I mean from other people. Have you tried maybe like watching other videos and the way they
No.
explain it? How about
No.
Emeka?
No, I never knew of this Quasimodo strategy till I watched one of your videos.
Okay. Yeah, so people explain it very differently and everything else. But and like there are a lot of setups. There are more than 5 setups that you can trade with. So what I chose to do was to actually find one setup, to simplify one setup and just trade that setup alone instead of me focusing on 4 setups. And some of these setups were not actually occurring as frequent as this one. So I chose the most frequent one, right? The one that happens most of the time. And the most profitable one. The one that gives you a bigger risk reward ratio. And I've simplified it to a point where it's easy, as long as you have basic market structure knowledge, it's easy for you to understand the concept.
Yeah.
It's very easy for you to get the concept and you can just implement. You don't need a lot of setup or a lot of strategies. You just need one setup and you can kill it. One setup alone and just be consistent with that. Master that setup. Be consistent with that setup and just continue to execute that particular setup. And overall, you're going to be profitable. As long as you back tested that setup and it has shown you that this works. One of the most common problems that most traders have is that they don't have confidence in their strategy. They don't have confidence. And the confidence only comes through backtesting. You having to actually see the setup work. You having to actually see the setup works is what gives you the confidence to execute flawlessly, regardless of the outcome of the previous trade. Because on a trade by trade basis, anything can happen. And there's a random distribution between wins and losses in any given set of variables that define an edge. So there's going to be random losses and wins. But in the long term, as long as you have an edge in the market, you're going to be profitable. And that's how professionals do it. That's how you become consistently profitable. Same with the casino. Do you think the casino care about one guy who wins like $100,000, that's on one bet? Do you think they care about that one?
No.
Yeah.
Do you think they're going to sit down and say, someone just won $100,000? Maybe let's try and change our strategy. Do you think they do that?
No.
Why?
Because the probability is that more people will lose.
They know that on a bet by bet basis, anyone can make money. Them, they can make money. The gambler can make money. They understand that for sure. But they have absolutely confidence that as long as more bets are placed, they have the edge. They have the competitive edge against the gambler. And they know that with 100% certainty. Because they know that they have the edge. They have the upper hand. So in the short term, like I always say, anyone can make money. Anything can happen. Anything can happen, right? But if that gambler continues to go to this casino and continues to do that, they know that that guy is going to lose money eventually. All the money is going to go back. Same with if you get a coin right now and flip the coin, can you tell with 100% certainty that it's going to be heads or tail?
No.
But when you flip that coin 10,000 times, what are the chances of it landing heads or tail?
Probably 50-50.
Yeah, it's going to be 50-50, or it can be 51-49, it can be 52-48, somewhere there. But it's almost going to come to 50-50. And it's the same thing, right? And they tell you that if it lands heads, you're going to make $1,000, and if it lands tails, you lose $100. Would you be willing to play that game?
Yeah.
Because why? Why would you be willing to play that game?
Because it's still in your favor, really.
Okay. And then what happens if the next flip, the next 5 flips are tails, and you lose $500? What's going to happen?
You still keep playing.
Are you
because
sure?
you-
Are you sure you're going to do that?
Yeah, because it only takes what 1, 2, or 3 trades to come back.
You just need one, because if you win, you win, you make $1,000. If you lose, you're losing how much? $100.
Mm-hmm.
So, but why do we complain, or why do we feel bad when you lose one trade? When we know that it takes just one trade can cover up to more than 10 losses. So it's a mindset issue. It's a mindset thing.
Yeah.
So that guy, if you flip a coin, even if you lost 5 times in a row, because of how our minds have been wired, we don't like losing. We are not taught on how to lose, unfortunately. So it becomes very uncomfortable, and we want to get back that money. And most likely, if you're flipping a coin and 5 times and there were losses, you would most likely say, the normal person will say, let me stop calling what? Heads. Let me start calling tails. And guess what?
No.
The next trade, the next flip is going to be what? It's going to be tails, right? Exactly. So it's like that. So trading works in terms of probability. You have to keep on flipping that coin. Keep on flipping. I said I have a video on this while I was talking about this. I have a video where I was talking about probabilities. I was actually using an online coin flipper where I show you that on a flip by flip basis, it's all random. In the short term, you can't tell. It's useless to try to guess that no, this one is going to be tail. You can't tell. There's no way you can know. Or the edge comes only through you doing that several times, and you know that over a series of flips, you're going to make money, because all you need, even if you had 5 losses in a row, you just take one trade. It's going to cover up all those losses and give you 5% in profit. That's the power of consistency, and that's how the casinos continues to be profitable, because they have an edge, and they trust that their edge, that if they continue to execute flawlessly, they are going to make money. They have the upper hand, and that's a model that you're supposed to adopt if you want to become a consistently profitable trader. Most traders don't think like that. Most traders will tell you with 100% certainty, no, I'm placing this trade, it's going to be a winner.
Yeah.
People will tell you that with certainty like that. But in the actual truth, the actual truth is that anything can happen. No matter how good a setup is, no matter how perfect everything might look, you will never know in advance. You may never know in advance what's going to happen next. There's always a random distribution between wins and losses. Yeah. So, any questions from me? Any questions for me?
Nope. I'm just going to analyze the charts now.
Just one.
Yeah.
Do we have a list of pairs that we look at?
Then, so I've shared the pairs. I've shared the pairs.
Oh, okay.
I've shared in the group, so you can just check them out. They're there.
Okay.
Yeah.
I mean the whole list. Do we have it?
Yeah, I've seen the pairs in the mentorship group. Like all the pairs I was looking at. They're there.
No, I
So
mean your watch
Oh,
list.
yeah, no.
oh,
He's asking about, having a favorite pair and stuff.
Yes.
Nah.
I don't have a favorite pair.
Oh, okay.
For me, I trade whatever has my setup. As long as it has
Ah,
my setup, I trade. I trade gold. I trade Bitcoin the same way I trade gold. The same way I trade USDT. As long as USDT has my setup, I'm taking the trade. The same way
okay.
I trade. It's the same way I trade UKO. It's the exact same way. Actually,
Okay.
I've had this setup on UKO. The market hasn't just come to my level.
Okay.
UKO and the USO. I plotted this I think some weeks ago.
Hmm.
UKO
2 weeks ago, yeah.
USO is here. The market just hasn't just come to my level.
Okay.
Yeah. So it's just one setup. You can just analyze all tradable assets. You can
Also,
use,
all the majors and the crosses and the
yes,
commodities. Okay.
as long as it's a tradable asset, you can use this
Yes.
strategy and actually trade.
Okay.
Yeah. Otherwise, this is how it is.
Okay.
So
Thank you.
let's continue to have these meetings just like
Yes.
that. So Monday, Saturday we'll do the trade reviews. Sunday, on this time we can be doing our focus like that.
Yes.
And then I was actually recording this video, so if you want it, I can still send you.
Yes. Please.
Yeah, I think it'll be good to post it in the group, yeah.
All right, great then. Any questions? Any more questions?
No.
Yeah, good.
No questions. All right, you guys, thank you so much. I wish you all the very very best.
Thank you.
Let's be profitable next week. Let's take
Yes.
some money.
Yep, yep,
Yeah,
yep.
yeah. Otherwise, let's analyze. We can analyze before you do everything. Analyze your Swiss JPY and post it in the comments in the group so that we see how you're going to analyze it.
Okay.
Okay, will do.
Give it a shot.
All right, great then.